Plus, this email making the rounds about Social Security and taxes. A closer look at what's true and what's not.
KARE 11 News at 5 starts now.
Tonight, we're taking a closer look at a new tax deduction for seniors. It's included in the new massive spending bill signed by President Trump on the 4th of July. The deduction means some people on Social Security will get tax savings, but there's still plenty of confusion. Danny Spiewak joins us now with more on what it is and what isn't, I should say, in that new law. Danny?
Well, the budget law does not directly eliminate taxes on Social Security, but it provides relief for some people 65 and older making a certain income. The legislation President Trump calls his big, beautiful bill doesn't end taxes on Social Security.
There's no specific deduction or tax credit for people on Social Security. However, there's a new tax benefit. It's a deduction of up to $6,000 for people age 65 and over.
We turned to certified public accountant Steve Warren to help us make sense of this new temporary deduction, which lasts through 2028.
It could impact planning. They may not need to pay in as much.
Seniors who make up to $75,000 a year get the full $6,000 deduction. But after that, the tax benefit phases out, ending at an income level of $175,000 per year for single filers.
It's your middle income person who's going to benefit. Your lower income person's already not paying tax at all, especially on their Social Security benefits. And then the higher income people, this doesn't matter because they're going to be past the phase out.
In an email last week, the Social Security Administration said the new law includes a provision that eliminates federal income taxes on Social Security benefits for most beneficiaries.
It was deeply misleading.
Howard Gleckman with the Urban Brookings Tax Policy Center doesn't deny that the law offers tax relief, but he says it's wrong to imply that Social Security taxes are being eliminated.
Anybody, whether you're a Social Security beneficiary or not, who's 65 or older, would be allowed to take a bigger standard deduction than they currently can. That would reduce their taxes, including indirectly some of their Social Security taxes. But for the vast majority of people, it wouldn't eliminate them.
This is a new tax deduction for seniors, meaning it doesn't replace any existing tax benefits. It will be added on top of an existing benefit that already offers a deduction for people who are 65 and older or are blind. So, Julie and Rena, it's a lot to sort through, but it is a relief for some Americans.
Well, I'm glad that you kind of dove into it because it's all so overwhelming. But I mean, if you're talking about people 175,000 or under to a point, that's still $6,000 a year for a lot of people, correct?
Yes, significant for those who do qualify, yeah.
All right. Thanks so much, Danny.